Hi all. Lom and Donatas were discussing in their journals about the merits of taking a long trade on the pound US dollar. There was an issue arised on Roger's confirmation. I'm not sure whether that was that, hey, Roger should rubber stamp the trade for us, or whether it was a confirmation and understanding of Roger's method. I'm going to go over some of Roger's method and some other thoughts that I have on the pair. And the first thing that I did do is obviously I drawn my support and resistance lines in. I've kept all the historic ones just to show you guys from the progression of this trade. The key one now is 160 that has been mentioned, and this pair has been in a buy for a long while now, in my opinion. And if we go back to June, at this point where I've drawn the black line, that was an indication where I and guys like Roger have started to look at longs. We had a swing low which created and formed support here at the bottom. I've marked this candle because it was this candle that took out the high of this candle. So from a weekly point of view, at this point we were starting to look for longs. When we drop down to the daily, we would need to mark, well, at what point are we actually starting to take longs? And once our MAs were in sync, we will then mark, well, I mark a green line that now I am starting to look for long trades. If you, some of us, the advanced guys, would start initially taking trades on all of these days where we've had the red bars. But generally, if you had followed TAA principles, you would have drawn a line across. A safer side, price closes above resistance. We've had our PA a little bit below here, off support at the bottom here. At this point we are entering along, and I'm just going to mark with arrows at what point, in fact I'll mark with a check sign at what point you could have entered long trades fairly safely, in my opinion, with this. The price progresses along, maybe start to sweat a little bit. Here's generally where most people would have put a stop at support, but we're now getting a second opportunity to get into the trade again. We've drawn a trend line up above here, we've got a hammer over here, but we've got a hammer with overhead resistance again. So for me, I would have been getting in and taking a long trade with a close above support, a close above resistance, so that would be another trade. At this point we're in the trade for nearly a month that we have had the potential to take long trades, and it's at this point really that these two trades that we're in have really started to fly. We've shot up from 155 to 160. We had a point here at 160, before 160, where most people would have taken caution, and personally I would be looking at this point where, hold on a second, where's the 9 in conjunction, where am I on a lower time frame to get in, and maybe I might have missed this trade and I would have been watching the next day for a trade long. Price came back down to our 160, so at this point of view I've started to draw my trend line, and there is a couple of things that I'd be looking at to then take a further third long trade. It would be, look how long this trend on the worker has been in place, and the longer a trend is in place, at some point they need to come to an end. There's nothing yet indicating that this trend is coming to an end, but as we said previously, 160 has always been critical. So for me, to take another long trade, I want to see clear price action above this. So although this is a trend trade, we still want to incorporate price action to make sure that we're on the safe side of the trade. I hope this helps you guys. Thanks.